Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager here at Schwab, and this is Advanced Charting Techniques. And today we have another viewer request. I was going through the survey feedback from those that fill that stuff out for us, and I always promise I look at that stuff. And one of the attendees had left me a nice little note about the presentation I had recently done on the TTM squeeze, and he noted, "Hey, Cameron, I used to have a favorite coach here. He retired. Now I can't find a video that he once did on TTM Wave. Could you possibly revisit that and how it ties into TTM Squeeze?" And I thought, yeah, absolutely. We can go through the TTM Wave. So I think this is going to be a new indicator to a lot of you. It is commonly used in pairing. It's coupled with the TTM Squeeze. I'll show you where you can find that discussion a little bit. But before we get into any of it, let me first of all say hello to everybody who's already joining us out there in YouTube. Hello there, Selva, Life in the Fast Lane, Mighty Mouse, Sandeep, Will, Bob, Michael, Ocean Life, Chris B, George, Cedartown, Greg, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, if you're just watching the recording of this session, that's fabulous. Enjoy the show, but be aware that you're invited to join us in the live discussion. This is a Friday webcast series, and we kick things off promptly at 1 Eastern. We'd love to have you here in the live stream audience if you'd like to join us. I also would like to issue an invitation for you to follow me and follow Kevin Horner. Kevin's joining us in the chats with the live stream audience. Kevin's another fabulous presenter. Brings a wealth of knowledge to this discussion of technical analysis. So Kevin and I can be found on X. If you have an account there, go follow us. You can find Kevin there at Kevin Horner CS. You can find me on X at Cameron May CS. But it really is the very best place to connect with your favorite presenters in between the live streams. But let's get right into this discussion. And as we do, of course, we have to kick things off with a quick reminder of the risks associated with investing. Certainly applies to technical trading as well. So bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of a particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right. So let's review quickly what we're going to be doing today. So each week we kick things off with a quick review of any existing positions that we built over the previous weeks. So we're going to take a look at current paper money positions. Then we're going to take a very quick peek at the markets through that trend, value, and momentum trading strategy that we discussed a few weeks ago. And then we're going to get into the bulk of today's topic, which is going to be the TTM Wave indicator. Now, I know a lot of you are familiar with TTM Squeeze. If you've been here for even a couple of weeks, you know about that indicator. But let me know, are you familiar with TTM Wave? I would suspect this is going to be new to a lot of you. So I'm going to discuss briefly how it's built, but spend most of the time on how it's used in combination with a TTM Squeeze. For some traders, TTM Squeeze can work all by itself. For others, though, they like to recruit the TTM Wave, and I'll show you the difference between those two. So let's get right to our existing positions, though. So here we find ourselves on our monitor tab, our activity and positions. We're down to one position here on Apple. We had 4 positions as of last week. It's been a pretty active last 7 days. We've had some stops triggered. We've had a target achieved. So let's have a look at what's going on with things. I think what we'll do here, let's start off with the not so fun news. We've had a couple of stops triggered. So we had TDG, TransDigm Group. You can see we took this along with some other technical metrics. We saw a breakout just back there on the 16th. We had a target established right up here at previous highs, looking get up to about 1390, and you can see we teased with this. This is the potential benefit of a trader who's monitoring their positions quite closely. They can make judgment calls if they're getting close. If they might decide close enough. That's a possibility in this case, though. We missed that target. The stock started to sag, and then look at this big drop it took. Fell back below our support, triggered our stop, and we were stopped out. So entered here, stopped out right down here. So TDG stopped out, AVGO, sort of the same storyline, but in reverse. Here we took a position and the stock went down just enough. How many of you have had this happen before? We call this a whipsaw event, where we have a trade concept, we have an idea for managing profits, for managing losses, and then the trade just decides, let's just dust Cameron out of this trade just quickly, and then off it goes, making its way, it's higher now than it was, making its way potentially toward our target. But yeah, we actually got stopped out on this on a pretty tight stop. We didn't take much risk here, didn't have a large loss there, but out of the trade, that one's done. Now, let's now look at some happier news. And this trade is actually more than enough to make up for the two that went south on us. We had a position on Costco. Robert, you've actually had a whipsaw before? Yeah, I know. Yeah, it happens. If you've traded for any amount of time. Ocean Life said they had a whipsaw on Walmart. Yep. Okay. So with Costco, this one's just been plain old cooperative since entry, right back here on January 3rd. Took a position, again, with a relatively tight stop and a relatively aggressive target. And in this case, off it went, got some legs, hit our target. We were out at just a shade over $1,000 on our limit. That was filled. And then it's kind of blasted on beyond that. So we left a little bit of money on the table, but a nice little target hit. Now, I'm gonna hit the pause button right there because I just saw something in the chat that kind of raised my eyebrows. We're being joined right now by about 500 people out there in the Atlanta Technical Analysis and Options live workshop. So hello there, Atlanta. Let me say hello to the instructors as well. Hi there, Ben and Ray and Scott. Guys, you have a great crew working for you. Hope you're paying attention in that webcast. Also got to say, I pay attention to stuff like, I happen to know it's Ben Watson's 20th anniversary right now as a coach today. So congratulations, Ben. Ben and I have actually worked with each other for the majority of those 20 years. I started 3 months after Ben did, so I'm coming up on my own in a couple of months or 3 months. But everybody out there in Atlanta, enjoy the workshop. We're talking about technical analysis here in this webcast as well. So let me get back to the final position for our portfolio. We have Apple remaining in our example portfolio. We have 25 shares. Purchased those shares for $222. Right now, the stock is at $229. It's cooperative, still in a position, up $169. Here's what it looks like on our chart. Here's Apple. We took an entry right back here. Stop down below recent support seems to be around 220, so we have a stop down below that. We'll see if we can get up to those 260 previous highs. But Brown Buffalo says, why not do a trailing stop on some of these things? You know, sometimes a trader can do that. They attach a trailing stop, which just moves up automatically as price moves. There can be benefits. There can be disadvantages to that. It automates the process, which can be great, but then it also ignores anything that's happening on the chart from the moment of the trail stop. So some traders might prefer to retain that judgment for themselves. So there's our Apple position, just the one position remaining. So let's go get some context for what's happening with the markets more broadly. I'm going to use the S&P 500 as our stand-in for what's happening with stocks. It's been an up and down day. Been a lot of economic news for traders to digest. We keep seeing maybe potential signs of strength and then also potential signs of increased prices, which might not be so good. But the net for a technical trader, they might look at this chart and say, well, you know, we're still trading almost at all-time highs on the S&P 500. Bit of a possible bearish engulfing on the day-to-day activity on the chart. If you're not familiar with a bearish engulfing, that's where you have a white candle that seems to be just about swallowed up by the body of a subsequent red candle. It's a real day-to-day reversal of investor sentiment in this case. So where are we headed from here? Well, let's take a step back from the day-to-day and look at things more broadly. I'm going to come up here to our studies and load up our study set that we call the TVM strategy set. This is the trend, value, and momentum set that we discussed. It's been now about a month or so. Let me do this. So I know that a lot of you are watching right now. You're not familiar with this set of technical indicators. I call it the trend value momentum set. Covered in a previous webcast that I referred to as understanding the trend value momentum, or in other words, TVM chart trading system. Let me put a link in the chat that will link you. You can watch this afterward if you weren't familiar with this indicator set. Let me paste that in there, tag my initials on the end. There you go. So there's that link. But basically, as the name indicates, this is a combination of indicators sometimes used by traders who are looking for strength in a trend combined with relatively short-term indication of value. In other words, maybe price has come down a bit in the short term, and they might use RSI for that sort of an indication, but also seeing momentum going in the direction of the trend. So our momentum indicator here being the MACD histogram. So what's going on with trend? Well, our 50-period triangular moving average is still above the 100-period triangular moving average. That's typically interpreted as a continuation of bullishness. So despite a little bit of trailing off from recent highs, the trend, at least through this one technical lens, appears to still be intact for the S&P 500. There have been some other cases this year where we got close to a signal of sufficient trend weakness that maybe a trader might put a larger technical question mark on that. But for right now, trend appears to be still intact. What about value? There's something here on our value indicator. Typically, the trader might be looking for the RSI to dip down below 40 to indicate near-term levels of value. So like we were below 40 here, we were below 40 here. You can see that those coincide pretty nicely with market lows here and here. So things are moving in that direction, but I also did want to point out, what do we call this? When we see peaks on the indicator that are also working their way down. So it's not just the indicator itself going down, but the highs and the lows of the indicator are going down at times when the same is going the opposite direction on price. So on price, we saw higher highs. On RSI, we saw lower highs. To some, this may actually carry a little bit more technical significance. This is known as a divergence. In other words, the indicator is diverging in its behavior from what price is doing, and this may be a sign of more weakness to come on price. That's a tale yet to be told. Hasn't been confirmed yet by trend, but I think that there might be some traders just beyond the mention in this webcast that have noted that and are keeping an eye on it. So we'll see. But at the same time, we also see momentum is shifting downwards, still bullish, still above zero, just not as bullish. And you can see that reflected in the chart. So overall, trend okay. Maybe a couple of things suggesting for some traders, pump the brakes a little bit. That's only one technical lens, so obviously not everybody's going to see it this way. But that's a look at the S&P 500. So with that as a backdrop, let's get into this discussion of the TTM wave versus the TTM squeeze. And I asked our attendees, how many of you have used that TTM wave? And I saw a few of you say, nope. Okay, so Ocean Life says nope. Say Again says no. Jay Richardson says not familiar. Chris B says yes, and thanks for covering this. AJ, you haven't heard of the TT wave? Great. Okay. So I'm going to clean up our chart technical indicators. And how about let's bring up a fresh chart. Let's switch things over to, first of all, Netflix. Bring up Netflix. Let's clean off our TVM. Too many acronyms flying around right now. So that's a nice clean chart. And I'm going to add, first of all, the TTM squeeze, and I'm going to do a short recap of that indicator. So let's add that. Let's type in TTM in our list of technical studies that are available on Thinkorswim. And I'm going to highlight TTM squeeze. You'll notice there's TTM wave as well. We'll get back to that, but let's add this. I'm also going to make this one a little bit thicker. Just, I don't know, make it more bold. It's a personal preference thing. You definitely don't have to do this, but I'm going to click on the little gear and change the width of the histogram bars on TTM and also the thickness of the dots. Let's make those a 5 out of 5. Click OK, click Apply. There we go. So there's our now familiar technical indicator. What I wanted to discuss, just as a recap, is how this is generated, how it might be interpreted. So the way that some traders use this technical indicator is to identify quiet periods in a stock, and then use those as a potential launching point for either bullish trades or bearish trades when that quiet period comes to a close. And specifically, they're looking for a period that they call a squeeze. Now, we've heard that terminology squeeze before because it also applies to Bollinger Bands. Bollinger Bands oscillate back and forth in a range above price, and they can widen and they can narrow. And typically what a trader looks for is for a narrow Bollinger Band that then begins to widen. They see that as a squeeze and possibly one of these events where we've hit a calm period that's starting to make a more explosive move in one direction or the other. The problem is Bollinger Bands are pretty volatile. They can actually pinch together and pop apart pretty quickly. So the TTM squeeze provides a very specific definition for what is a tight enough Bollinger Band and a long enough squeeze. Specifically, it's if a Bollinger Band falls inside of Keltner channel lines for at least 5 days. That's the definition of a TTM squeeze. And again, you'll see that displayed in greater detail if you were to go back and watch that video that I just, actually I didn't post that video, I posted another video. Let's post the TTM squeeze indicator video. So this is a webcast I did just a couple of weeks ago. This one I called TTM squeeze indicator, looking for stocks with rapid move potential, okay? So let me put that link in the chats as well. There we go. All right. But the thing that a TTM squeeze indicator trader typically zeroes their focus on are the string of dots going right down the middle of this indicator. Now, at first, it just looks like it's a dashed line of green lines and red lines, but it actually consists of individual dots. Let me zoom in here a little bit more closely so you can see this. So you can see right here, red dot, red dot, red dot, red dot, and then green dots for the rest of the time since then. When we have red dots appearing, what that's signaling to the trader is that a Bollinger Band invisibly behind the scenes is not displayed on the chart. You can if you want to, but the Bollinger Band has narrowed within the range of a Keltner channel line, which is only by this definition 1.5 ATRs above and below a standard moving average. Anyway, that's a lot. Alexis, you liked that video? Good. Yeah, the video will go way deeper into this than I will today. But in any case, getting a red dot just means, hey, there appears to be a squeeze happening. If there's only one red dot, it just means the squeeze came and went too quickly. It didn't hold. What traders are looking for when they're looking at the TTM squeeze is that they're hoping for a stock that really has calmed down for a period, and the longer it can stay in that calm range, they see that as more like the coiling of a spring. The longer you coil a spring, the more cranks you give it. You know, when you had your favorite wind-up toy and you crank it and you crank it and you crank it, you know that thing's going to take off when you let it go. When that spring pops and sends it running. If you only crank it a little bit, one time, it just doesn't do much. So a series of red dots might indicate to a trader that we're getting an extended winding period. And when this ends, maybe the stock is going to pop in one direction or the other. So which direction? Well, when we see a series of red dots, and for most traders with this indicator, at least 4 or 5 is kind of a standard minimum here to say that we've coiled the spring enough and it's ready to pop. But in any case, when we transition from a red dot to a green dot, that may signal that the stock is about to move. So which direction will the stock move? Well, and will is a strong word, might the stock move is a better way to phrase that. Well, if you look at this right here, we had a series of red dots and then we had a green dot right there, and it's accompanied by a red histogram bar pointing down, and it means just what you think it means. The indication here is that there's been a quiet period, and from here the indicator is estimating that the price is likely to pop to the downside. Okay? And in this case, that actually kind of worked out. It went down for about, 5 days or so. So a bearish trader might have seen that as an entry signal and panned out for a little bit. That can happen in either direction though. Let's look at another move. Yeah, here's another one. I'll zoom in, maybe capture a couple of these. There we go. So here we have the coiling of the spring starting right here. You'll notice red dot, red dot, red dot, red dot, red dot. So there's 4 or 5 in a row. And what some traders will do is once they have 4 or 5 in a row, they'll look back from that moment. So they haven't even seen the green yet. Mighty Mouse says, is the TTM squeeze script being shared here? It's not a script, Mighty Mouse. It's actually just one of our standard indicators. You can just go load it up. Find it right up here under the beaker. And if you need to see that being loaded, you can actually go back to the archive for this webcast. Just go back to the start, and I showed you how to load that up. Anyway, but when we have that 4th or 5th red dot up here, some traders will just look at, okay, well, from that moment and looking backward, where has resistance been? And where has support been? So let me draw in a line there. And it looks like our support line might be right down around here. But this can help us define a trading range. And there's almost always a range that appears prior to a series of red dots like this, just because the Bollinger Band has to quiet down inside the Keltner channel lines, meaning price just isn't doing much for long enough to start to generate this signal. And then the trader just waits for a break. Which direction? In this case, it was a break to the upside. And it took a little while to develop. It actually sagged back down a little bit, but that actually did ultimately result in a nice upward move. Actually, this one kind of settled back into a new trading range. 1, 2, 3, 4, 5, right here. So as we get that 5th one, maybe we look back and say, well, what's the new trading range? It looks like our high was here. Lows might have been even all the way down there. But then we get the break to the upside. Here's our green dot. In this case, price broke out of that channel. Sometimes the price has not broken out of the channel yet, but we just looked at the histogram to see which direction the price move is expected, and we start planning a trade in that direction. So that's called the squeeze, but the difficulty is sometimes it works and sometimes it doesn't. Yeah, Mighty Mouse, yeah. Kevin says, I haven't shared my script. I don't do scripting, by the way. I don't know a whole lot about scripting. It's a fabulous tool. It's just not one that's in my toolbox. So I don't have scripts to share in these webcasts. And the things that I demonstrate to you are just found in the menu right up there. No need to use a script. Anyway, but look at this one right back here. We have a series of red dots, and this sort of illustrates an inherent issue with the TTM squeeze. It can give signals that are kind of counter to a prevailing trend. Okay? Right here, we have a series of red dots indicating the coiling of a spring here. And really, it started back here. Let's zoom in on this. I might have to zoom way back to here to capture all of this. There we go, close enough. So we have, there's one red, one green. So the series starts 1, 2, 3, 4, 5. Here's sort of our range. Trading range appears to be here, down to maybe about there. We're starting to break out. You know, a technical trader just using resistance might have thought that was a break. We did not get a signal from our TTM squeeze. The signal actually happened here. As we broke down, maybe this is signaling the start of a nice new bear move. Well, we didn't get much of a bearish move. Stock went down a little bit, chopped sideways, and off it went the opposite direction. So for some traders, the difficulty with the TTM squeeze is it does not have any bias toward trend. None at all. But but for some, they have a preference to bring trend into the discussion. Well, what do you suppose TTM wave was built to address? It is a trend indicator. Okay, Andy says, is there a percentage of times that you feel the squeeze is accurate, or if you have a feeling about percentage? I don't do feelings and percentages, Andy, because it doesn't matter, because literally right as I say whatever I say, if I had a supercomputer generating a data set to tell me how accurate this thing had been in the past, those percentages are changing right now. And it depends on time frame, it depends on security. There's just too much. So what a trader can do is just sort of run it through its paces using a range of symbols, see if it seems to work on the symbols that one is dedicating most of their time to, and decide whether it's going to play a role in their portfolio or not. With each of my webcasts, what I would hope everybody comes home with as a message is that these are educational. This is not ever a sales pitch. Somebody asked me to demonstrate TTM Wave, so I'm going to talk about it today, for example. Anyway, so let's put TTM Wave on here. And as I mentioned, it's intended to be the trend qualifying mechanism of a TTM approach to trading. So let's go up here and I'm going to add TTM Wave. And then I'm actually going to quickly make a customization to it that just to my eye is easier to follow. Okay. So if we come back up here, we type in TTM, we click on Wave, we click Add Selected, and then we just apply that to our chart. We're left with this series of light and dark blue histogram bars and a series of red and yellow bars. The red and yellow are kind of compressed and they kind of tread on one another. Actually, what this indicator is doing is it's combining two indicators into one. What I want to do is I want to pull those apart, separate them. So here's what I'm going to do. Let's go back up here. We already have TTM Wave added to our chart. I'm going to do it again. And I'm going to keep half of the indicator in one panel and put the other half of the indicator in the other panel. So let's put TTM Wave on again. So you notice there's TTM Wave twice. And each of these are constructed of basically two indicators known as Wave 1 and Wave 2. So let's come up here. We have Wave 1. So all I've done here is I just chose one of them. They're both identical at this point. If I were to click Apply, you'd just see it twice on our chart here. But let's customize the first one. I'm going to click on the little gear icon. And the first one, I want it to only show Wave 1. So here's Wave 1. It's going to be shown as yellow and red bars. And I want it to show as a plot on the chart. Wave 2, I'm not going to show that one. So let's go to Wave 2. It has highs and lows. We're going to hide the highs and the lows and just click OK. And if I click Apply, keep your eye on this top window now. Click Apply. Hey, that's now just red and yellow. So the other one, we're going to customize, and we're going to get rid of Wave 1 while retaining highs and lows of Wave 2. So click OK, click Apply, click OK again. There we go. This to me, yeah, George, you say you like this tip just to obtain better resolution, better view into this indicator. Yeah, so let's talk about what these waves are. Now, what my desire always is to tell you as much as I can about an indicator, and sometimes for some people they're like, you're telling me too much when I get into exactly the algorithms for how something's constructed. So I really wanted to do that today, and I wanted to satisfy my own curiosity about the construction of this indicator because I've never understood exactly where these histograms come from. That kind of drives me nuts, but after doing lots and lots and lots of digging, I find the construction is not public. I understand the concept of these indicators. I can't tell you exactly how they're built. So that's just going to have you're just going to have to say, okay, well, that's the way it is. Anyway, yeah, I tried my best to try to figure out, where this stuff is coming from so I could tell you that. Anyway, at least I can tell you conceptually what's going on here. This red and yellow wave, it's Wave 1. It's intended to be an interpretation of short-term trend strength. We know that within a trend, any stock, if stock is making its way higher over the course of several years, it almost never just goes straight up, right? Instead, it'll tend to move in little waves, little stair-stepping patterns as it's moving higher. So we might be able to say a trend is up, but within that trend, there can be little micro trends, sometimes going down, sometimes going up. And that's what this is intended to interpret. What I could determine is that this one is typically built with a comparison of 8 days of trend data versus 15 days worth of trend data. This one down below, a little bit longer term, much less sensitive to price changes on a chart. Wave 2, so we have Wave 1, which is the short-term wave, and then we have Wave 2, which is the longer-term wave. Not I don't know that I would classify it as truly long-term because it can change direction in less than a year, if that's one's definition of long-term. But this one is shorter term and this one is longer term. And this one's constructed using comparison of algorithms and moving averages and stuff. I guess that's about as much as I can tell you. But generally 15 to 30 days is kind of average. Then, brothers, if you like knowing all the detail, you like to explain the same way to your brothers. That's why this class is a favorite class, because thank you. I appreciate that, because I work hard to try to make these as informative as possible, both under the hood and behind the wheel, okay? But this short-term trend, let's talk about how it's interpreted. I think it makes a lot of sense. It seems to be pretty simple. When we're above the zero line with either of these trends, for the intended time frame, the interpretation is that we are bullish. So with our shorter term histogram, when we're seeing the yellow bars and they are rising, they're lengthening higher above zero, that's interpreted as a shorter term strengthening of a trend. When we see red bars start to appear, the short term is still up, still an uptrend. It's just not as strong as it once was, may not carry as much momentum as it did. And we just carry that same logic down to the longer term wave 2 oscillator, the wave 2 histogram. When we see bright blue lines, that's interpreted to be a bullish trend that is strengthening as long as it's above zero. So the trend is strengthening as we're above zero. If we start to see dark blue, it's still an uptrend in that longer term time frame, but it's just not as strong. Does that make sense? If we're below zero in either case, if we're below zero with the short term and we're seeing red histogram bars, that is a strengthening short-term downtrend. If we have yellow, it is a weakening short-term downtrend. And then with the blue, with the longer term, if we see bright blue, we don't see any bright blue examples here on Netflix on this chart. But if we're below the zero line with bright blue, that's a strengthening bearish trend. And dark blue is a weakening bearish trend below zero. So it's just position relative to zero that gives us that. So what a trader might do then is incorporate both of those time frames into either qualifying or disqualifying a TTM squeeze as a quote-unquote legitimate signal. So let's look at some examples of this. So let's look at maybe Meta. So here's Meta. You'll notice during right back here in November, we started to get a series of red dots. Red dots, red dots, red dots, and then we got a green dot. That green dot was accompanied by, if I zoom in here enough, let's zoom on in. Let's just pull in all of this. There we go. And Andy says, do these work on the same, on the lower time for shorter time frames, like on hourly charts or minute charts, or could we even extend them out to weekly charts? Yes, conceptually, this is with most of the technical indicators that I teach, most of the technical techniques that I demonstrate here. They're portable from one time frame to the next, pretty much whole hog. You just change the time frame and interpret it the same way on a different time frame. But regardless of time frame, I have to say, no indicator is perfect. Nothing's going to deliver a guarantee of performance each time it generates a signal. All right? But you'll notice right here on our TTM squeeze, we got a bearish signal right there going from a series of red dots, got a green dot, accompanied by a red histogram bar. That's a bearish signal. So for a trader who's just trading in a vacuum otherwise, they might look at that and say, there's my signal, and we take a bearish trade. And what did the stock do at this point? It just went up. Why did it go up when our technical indicator was signaling that it was going down? Well, in the short term, trend was down, but the long-term trend was still, at least using this TTM wave indicator, it was still bullish. Yeah, a little bit softening in bullish, but still bullish. So in this case, this would have signaled to that trader, hey, Cameron, you're about to take a counter trend position that's going to have to see some significant weakening of what was happening before in order for this thing to work out, and it didn't work out. So this one, if our trader was looking not just at TTM squeeze, but also needing a consensus from that TTM wave indicator, they would say close but not quite. 2 out of 3, that might be good for baseball, but I need 100% here. So let's look at our next signal on Meta. So here we have green dots, green dots, green dots, green dots. There's a series of red dots. 1, 2, 3, 4, 5. When that fifth one appears, we might be able to define our trading range. And then we got a TTM squeeze trigger right there. On what date was that? That was January 24th. So TTM squeeze is saying, Cameron, go, go, go. What's the short-term trend at that moment? It is bullish and strengthening, at least according to the TTM wave. What is the longer term? It is above zero and strengthening. So that is check, 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 and the trader may go ahead with planning their trade. So what would be a typical way to just carry that trade out? Well, as we discussed when we were talking about TTM squeeze, the TTM wave doesn't necessarily introduce anything new as far as planning the back end of the trade, just the qualifying of the front end of the trade. So planning the back end may be the trader may just look for possibly repeating the channel depth. So let me show you that. I'll right click here. Let's duplicate this drawing, drag it up here, and that may serve to create a target. So in this case, maybe the trader was looking to get up to maybe 685 or 686 and take their profits if it got there. In this case, it did. If it stumbled and dropped back, maybe they have a stop just back inside their channel. All right. So there's an example of both sides of the coin, how it can disqualify and it can actually, it meaning the TTM wave, can actually qualify a TTM squeeze fire signal. So let's look at maybe a stock. I think IBM did something similar recently. Was it IBM? No, it was ABT. There's ABT. So as we zoom in here again, we can see here's our stock going sideways. It starts to create a series of red dots. Here we define our channel. Where do we get our signal? Signal actually, it hesitates for a while. We finally get a signal right here, and we're strengthening in the short term, strengthening in the long term. This one was a valid breakout, whereas this one, after this series of red dots, there the signal fires. It fires bearishly. We have bearishness in the short term, but bullishness in the long term. Not good enough. All right, let's look at some more examples, maybe of something. Let's see what's going on with Oracle. All right, so with Oracle, let's see if we can implement this new knowledge that we have, the combination of the three. We have a series, we have our TTM squeeze right here, firing bearish, right there. Firing bearish. We're bearish in the short term. Long term would have disqualified that one. Was there another one here? This one fired bearish. That one would have been disqualified. I think that's going to do it. There are no other what might be considered to be valid TTM squeeze signals here. There was one blip here, one blip there. Typically a dot or 2 or 3 for most TTM squeeze traders would be dismissed as being not really a valid squeeze just yet. But we also have, I wanted to wrap things up with PGR. This is something that's just happening right now. This will be interesting to see how this plays out. But here we've had a squeeze that's lasted for what, about 15 days? Just in the last couple of days, it has fired. In this case, fired bullishly. We're popping green with a blue histogram bar that's saying, Cameron, time to enter right now. Our short-term TTM wave is strengthening. And look at that. Our long-term actually just went from softening to strengthening. So let's take this as our trade. And our plan here, let's right click, duplicate that. Looks like maybe have a target right up close to previous highs. It's kind of nice when we have a convergence of different technical signs. How about we look to maybe take profits if we can get up to here about 267, about $15 to the upside. If we have about $15 to make, maybe we don't want to risk more than about 5 or 7 to the downside, and that would take us back inside of our channel. So what if we were to put our stop down at let's say 247? That's down inside the channel. It's offering at least mathematically at least a 2-to-1 reward to risk. Let's go place our trade. So here's PGR. Right click on the ask price. We're going to put in a custom buy order with an OCO bracket. 10 shares is going to be about $2,500. Let's spend about 5,000. Let's do 20 shares. I'm going to put this in as a market order. Obviously, there are risks associated with submitting market orders. Our target was up there at 267. Let's make that a good till canceled limit order, meaning we don't want to sell for a penny less than 267. That's our minimum acceptable limit. Or if we drop down to 247, that's where we'll place our stop. There we go. There is our plan now put into action. Let's click confirm and send. We're going to buy 20 shares of PGR at the market. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. We're going to have a target at 267. We'll see if we can get to that limit price. We're going to have a stop at 247, and with stop orders, there's no guarantee that the execution price will be equal to or near the activation price. If one of these is filled, one of the sell orders is filled, the other one just is automatically canceled. Thus, the OCO one cancels other designation. No commission on this trade, but there certainly can be on some types of trades, and we're going to send that thing off. Bought that for $250, $217. Got about $15 up to our target. We got about $5 down to our stop. But good point is that with one of the stops that we just got triggered on this last week, we actually got filled a couple of $3 lower because of a gap down. That's a risk. Robert says, can you do an option as well? Not today, Robert. I don't typically do options in this webcast. I do have other webcasts where we trade options. You can go check those out. But can this be applied to other sorts of trading? Yeah, can be. Now, does that mean it's going to work? That's going to depend on individual trades. Yep. But everybody, we've accomplished what we set out to do today. I always appreciate when somebody says, hey, Cameron, can you check out a specific indicator I'd like to know a little bit more about? Yep, today it was about the TTM squeeze. We talked about how it's built, talked about how it's commonly used, not TTM squeeze, TTM wave, but how it's commonly used in combination with a TTM squeeze. And we even got an example trade placed using that indicator. So thanks for the suggestion. Give me more if you'd like to do that when you fill out the surveys. Yeah, leave comments with those sorts of suggestions. They're definitely helpful. Time for me to let you go. Enjoy your weekend. But as you do, let me give you a couple of quick reminders. First of all, if you're not subscribed to our Trader Talks channel, make sure that you do that right now. It doesn't cost anything. You can go down and click on the subscribe button right now. It literally only takes a second. But our Trader Talks channel is where we host our previous webcasts. You can find those webcasts that I linked earlier right here under our playlist. You can also join our live streams. But for example, let's say you want to learn about the TTM squeeze. Type in TTM. Hey, there's the TTM squeeze. I've done couple of presentations in recent months on those. Or let's say you wanted to learn about TVM. We type in TVM, there's the trend, value, and momentum chart trading system that we used in our analysis of the S&P 500. All right. Hey guys, thanks for the subscription. Also make sure that you're following Kevin and me on X. You can find Kevin there at Kevin Horner CS. You can find me there at Cameron May CS. If you have an X account, go follow right now because that's the best place to connect with your favorite presenters in between the live streams. And also thank you to everybody that's already dropped a like on this webcast. I really appreciate that. 165 people watching. That might be the highest ratio of likes I've ever seen, 72 out of 165. It's a pretty strong ratio. Anytime you like one of our webcasts, click on the thumbs up button, the like button. It registers as applause to your presenter, and it also gives us a boost in the YouTube algorithm, helps us find a wider audience and help more people understand these sorts of things. Okay, everybody, go enjoy the rest of your Friday. Enjoy your weekend. I will see you next week. I'll look for you in a future webcast. I'll also look for you on X. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.